Alright, so today is January 26th, 2023, and I am actually looking at something different today. I'm looking at a new chart, which is Euro USD, which is a foreign exchange pair, and I'm looking at a new setup. So I'm basically, I have a new indicator on the chart, and I'm trading the price based off of this indicator. Now, as we can see over here, there's a huge trend over here. With standard lot size, it's about $300. Another huge trend over here, similar in price. And as we can see, the way that this indicator works and the way that this chart and the way that you can trade with this work is that it goes from huge trends to minor trends, which could lead to minor losses, and choppy conditions, such as right around here, and right around here, and here. So the big trends, such as this one, is where the money is made. However, when you look into the chart and you just zoom in right around here, for example, the ins and the outs, the entries and the exits that people may enter over here outside of the huge trends is where the money is usually lost. So that has to be understood, and taking that into consideration, how do you navigate yourself through a market where a choppy market where most people lose their money? That does take time and practice, but let's just go back. Let's go back right here. Let's say you get into this trade, you enter it over here, the price goes up, you see the price going down, so it breaks below this candlestick over here. You might exit the trade with a small profit, and then you realize that it's turning around, and you might re-enter right around here. You might stay in this trade until about here. You might exit. So this is where some profits can be made. You can make a profit, that's fine. But as the day goes on, you continue to trade, you get a little bit uncertain. So you enter into a sell over here, and you realize that the market goes up a little bit on the next candlestick. So it touches our line over here. So you close out of the trade. That's a minor loss. And then it does it again. You enter over here, it goes up and it almost touches it, and you don't want to lose a lot, so you close out with another loss. And the same over here. Enter over here, you see it going up, so you close out. And that's loss after loss after loss. And there are many moments of uncertainty in the market when you don't know where the price is going, and you don't want to lose any money, so you end up closing out. So these small losses definitely add up, and they can take away from the big wins. Ultimately, you want to have more of a you want to be in profit, but like I said, these small losses do add up, and they can affect your P&L for the day incredibly. So how do you deal with this level of uncertainty when it comes to trading? Well, you want to usually make sure that if you close out of a trade, you are closing out at break even. I know it's easier said than done, but you want to aim to not lose anything. Or you also you also want to make sure that when you're in profit, you want to set a stop loss. So let's say I enter into this trade over here, it goes down a little bit, it goes up, set a stop loss. So the moment it gets into profit, so let's say it gets down here, I want to set my stop loss probably right around here. Now this might stop it out, but I would watch it and I'll be careful, and I would just adjust the stop loss so that if I enter in over here, then my first stop loss would be right around here. And then as the market drops, you can see over here, it would be right around here. And then it will just stop out. And I would be careful to enter as well. So let me zoom in right around here. I would not enter over here. It does break our line, but I wouldn't enter. I wouldn't enter over here as well because it's still in the no trade zone. Not here, not here. I would look to enter over here. And I'd probably enter over here, the second candlestick. But that one's touching. So I might enter in over here, which leads to the trade going in the negative. And then in the positive for 1, 2, 3 minutes. It's very, very small profit for 3 minutes. And then either closing out or being able to withstand this and holding on to the trade. As we can see over here, I would definitely close out right around here just because it breaks our level and it goes above. And this could be a false signal to buy. So all of this stuff, actually, it takes practice. And it takes real time practice to just understand how the market moves. And there's nothing that I can teach you that's gonna help more than you having chart time yourself. So with that in mind, this is Forex, EURUSD. And yeah, that's it for the day.